everyone, today we're talking about financial education and we're doing a review into his stock portfolio. Now I thought this would be quite an interesting video because I actually did one about Warren Buffett about a month ago and there was quite a lot of views from it, a lot of interest in the video, talking about his 10 biggest positions in his portfolio and what I think of them. Would I buy them positions, or do I think those stocks that are in his portfolio aren't a really good choice of stocks to have it right there, and there's better stocks out there available, and just doing a big detailed full review on it was quite enjoyable for me to do, and also because of the reaction as well I thought I'd do another one. And only like last week I saw Financial Education do a full stock portfolio of what he currently had invested into the stock market, and I thought it'd be a pretty cool idea if I went out and did a review on it and talk about some of the positions he had and if I would buy them, if I think the positions are a bad position, and take it from there. So I've looked at the video. I pretty much know most of the stocks that were in there quite well. There's only one or two I had to do a little bit more research on just to understand them slightly. But yeah, I've got a good grasp of his portfolio, and if you haven't seen his channel before, I'm pretty sure you will have done if you're watching this video, but if you haven't seen his channel before, it's a pretty good channel. A lot of basic information about investing into the stock market, quite useful information, so go check that out if you want, guys. But yeah, let's get stuck into Financial Education's stock portfolio. I just put down here US Steel and Tesla with question marks in blue, just because I'm sure they were in his portfolio, but they weren't mentioned in the video at all. But they were in his portfolio not so long ago, so I don't know what's happened to them. But both of them stocks, in my opinion, guys, I would not invest in. So maybe he has sold the positions in them because they aren't, for me, a good investment. But overall, we're going to get stuck into the 8 stocks that were there. Funny enough, there's 4 stocks in green that I would buy, 4 stocks in red that I wouldn't buy. So we'll start off with the ones that I would buy first. So obviously number 1 we've got Apple. Now Apple for me is a stock that I hold and that I enjoy holding. I think it was very cheap. I think it's slightly getting a bit more towards fair value now, but the company's just got such a great balance sheet and such a great dividend play, and you know, the Apple Watch is killing it, the services are killing it, so I'm a big fan of that company, so for me that's a good position to have. Alibaba, obviously I like Alibaba, I like JD as well. I talked about on this channel when I was making my choice about buying one of these Chinese stock while they're on a dip. I went for JD just because I felt like I liked the quality control slightly better, and I thought you were getting more of a discount on the company than what you were with Alibaba. But even so, Alibaba for me was a buy at the time. I just chose JD over Alibaba, and I think JD's actually done better than Alibaba so far this year, but both are just monster companies, so both great buys in my opinion. Callaway Golf, pretty cheap stock overall. It's something around $19 per share or something. A good company, a little dividend, nothing really impressive on the dividend side, but a good little company, a cheap stock. You know, in the long term, I believe that stock will go up, but at the same time, I think there's better stocks out there and there's better returns you could get. But if I was to rate Callaway Golf, I would say it was a buy. And the last one that I'd buy in his portfolio is Facebook. Obviously, Facebook is a company that I got back into about a week ago. I like Facebook. I think it's the #1 advertising platform out there. The EPS growth, the sales growth, it's a really good PE. So yeah, I'm a big fan of Facebook overall. The stocks that the Financial Education channel that I don't really like, #1 being Cirrus Logic. Now I don't like Cirrus Logic because the growth isn't amazing. It relies solely on Apple really, and I don't like having companies that are very similar to each other. And even though, you know, Cirrus kind of makes more of the parts, the chips for the Apple, it still relies on heavily on Apple. So I'm going to say there's a interest right there, because if something happens to Apple, it happens to this company as well. And for me, that's having the same interest because it affects both companies. If a company that doesn't have the same interest as another company is where something happens to it and that won't affect it at all. And if something happened to Apple, it would affect this company big time. And overall, to be honest with you, there's just so many better companies than Cirrus Logic out there. If I was kind of getting into that chip kind of play and all that, I'd be looking more towards like the Nvidia, the AMD side of it, especially Nvidia. So for me, I don't like Cirrus at all, and yeah, I'd rate that as a sell. Yeah, to be honest with you, an awful company. I can't say much more than that. Elf Beauty, I Same again, I don't like this company. Not amazing growth, but very overvalued overall, and yeah, I just feel like there's a lot better companies out there than that. It's not a sector I would want to get into as well. So yeah, that stock just doesn't interest me at all. And another company that I'd rate it sell at the prices it is at. Skyworks Solutions, very much like Cirrus Logic, but kind of like towards the 5G side of it. Same again, I think there's a bit of cross of interest here going forward. I think Skyworks will do better than Cirrus going forward in the long term. But like I say, just a little bit of cross interest there for me, so I wouldn't want to get in them both. I'd only want to get into one. And yeah, slightly overvalued again for me. Whirlpool, not much growth there. I think a bit of a different play, but even so, like the revenue side of it, the sales side of it is so poor. It's in another sector that, once again, I find very boring getting into. It's not a very exciting sector. There's not much growth in that sector. So yeah, for me, Whirlpool is another one that I would dodge. So overall, there's 4 companies I would have as buy, 4 companies that I would sell in that portfolio. Overall, a diverse portfolio. It could be slightly better in my opinion, because we kind of have 3 companies that I think could kind of bounce off each other, which I don't really like. So yeah, not great for being diverse. Dividend side of it, there's only really 2-3 kind of dividend players in there. So not too heavy on the dividend side of it. So I'd probably, if I was him, I'd probably look at getting maybe 1 or 2 more dividend stock. Like I feel this misses a Microsoft in there for sure. I think it misses a payment stock in there. You know, a Visa, a MasterCard, a PayPal. I think that's missing from there. I think if Microsoft is missing from there, those are 2 stocks that I would probably replace maybe one of these 2 with personally. If I had the choice in that portfolio. But overall, not a too bad portfolio. Like I'd rate it 5 out of 10 if I was going to rate it. Like if I had the choice between this one and Warren Buffett's portfolio to hold, I would choose Warren Buffett over this portfolio. I feel his portfolio is better than this one. If we were just going by his top 10 stocks versus Financial Education's 8 stocks. But that's just my opinion, guys, and that's what makes it all interesting, having your own opinion and your own choices. So credit to him for showing his portfolio anyway. I hope you enjoyed the video, guys. Thanks for watching. Near the 200 subscriber mark now, so thank you for that. Hopefully we'll get there soon. Thanks for all the support recently. It's been absolutely amazing, so thank you for that, and I'll see you on the next video.